Welcome back to the channel, guys. On today it's another portfolio update, and I've really been enjoying these types of videos, mainly because I get to firstly document what I'm tracking and look back at the end of the year and show you guys what can be achieved. I started this year with just over £14,000 in my trading 2-on-2 stocks and shares ISA, and now I sit on just over £40,000, and it has truly been a journey so far this year, despite analysts saying that we're going to head into a crazy bear market going into 2025. Now, you guys seem to be loving the portfolio updates so far on the channel, and I really appreciate all the comments that you give to me down below. And as I always say, this is a chance for me to show my journey, hopefully inspire some of you guys to start investing for yourself, and it's something to obviously look back on in the future to see where I started and where I essentially end up with my overall investing. Now, before we begin, as always, if you're new here, I've been documenting my investing journey for just over 2 years now, when I started back in 2024, I believe. So just coming up to finishing that 2-year route, and I've shown everything. I've shown the wins, the losses, the ups and downs, things that I've learned. I've really broken down the market and why certain indexes have performed well against others, and you can see that all documented onto the channel. Now, for context, I have 2 investing accounts. I have one obviously on trading 2-on-2, which is my stocks and shares ISA, and I have a genuine investing account on my FreeTrade, which I created back in 2023 actually, which was a mistake. I should have opened my ISA then, but again, it's the reason I create this channel, and I will be posting another video on investing mistakes. So if you're a beginner, keep your eyes peeled for that. I've also recently been investing into crypto. I've been looking at coins such as Bitcoin, Ethereum, for example. Not necessarily the meme coins, but it's something that I've added to my portfolio and something I'm scaling into. So if you want more of my reasons behind crypto and why I think it's important going into 2026 especially, I'll happily share that with you guys on future videos. But since the last portfolio update, we sit on just over £40,000 going into December, which is amazing, and I've obviously been consistently adding to my portfolio, and I've also invested in a stock at the end of the video, so make sure you watch all the way to the end. Now, in today's video, we'll be firstly talking about where we are currently in the markets and what uncertainty there is. So it's important that we understand the reasons why the markets are going up and down, even if you're a longer term investor, so you can really understand how seasonality affects stocks and how earnings will obviously, sometimes it'll affect the share price, but sometimes earnings don't. I mean, it's important that we ask ourselves why that is the case. So we'll be doing a wrap up of what's happened so far. We'll also be looking into my portfolio at the moment and how I've been performing, and lastly we'll be doing some live investing at the end of the video, and I'll share a stock with you that I know that you'll find insightful that I've invested into December. Now, firstly, I just want to bring up the charts here so we can visually see the performance of the S&P 500 to this date, right? And coming into the month of December, we came off from a very strong bounce back, pullback, you could say, from November, and we approached this double top here. And the reason for that is because interest rate cuts are being priced in, so the Fed are looking to aggressively cut rates, which is good for companies because money becomes cheaper. Companies can borrow at a much lower rate, causing the Fed, well, basically due to the Fed cutting rates, right? So that's favorable for companies moving forward, and I think that will continue into 2026. Now, there will be a Fed meeting in January, and there'll also be some earnings in January as well for Q4, so it will be interesting to see how that performance weighs up. And I think if they're positive overall, we could see these all-time highs break again. So overall, I'm pretty bullish on the market. I don't see a reason not to be. I know there's a lot of fear that always gets pushed around, especially going into January, about crashes and we're, overvalued, etc. But price and expectations sometimes don't meet each other. Sometimes the market is just irrational, and I've learned this throughout the years investing. Logic isn't the best way to always approach it, so it'll be interesting to see. But overall, I think we will smash these all-time highs here, so very positive for the S&P 500 so far. So on to the juicy bits of the portfolio itself, how it's been performing. I've done pretty well this year, and we're going to dive into the stocks and the ETFs that I'm currently invested in, and also some investments at the end. So before we get in, we're sitting on just over £40,000, which is insane to say for me personally. It's a huge milestone in the journey, and I started this with £1,000, so it's great to see the compounding already taking place. And although we can't predict markets, we can only be consistent in our approach, right? So as we hit here, rate of return just 54 with a total return of just over £7,500, and that is mainly distributed from our main ETF. So we obviously are heavily invested in the S&P 500. I'm very bullish still on the US, although I have some small positions into emerging spaces, and I have a position in Alibaba as well. But just off the back of the S&P 500, over 200 shares in this ETF at the moment, and it's the main core, it's the sun of my portfolio, so to speak. So everything is built around the S&P, as it is still even though you could say it's a diversified portfolio, it is heavily weighted towards big tech, right? Which could have some of its fears in itself. Nevertheless, we've seen some amazing gains from here. My average price is around £84. I know this is the VUSA, so £84 my average price is, and we have a return of just over 15%, which is great, and I'll be continually adding to this portfolio as the years go on. Next on the list, we have Alibaba. Again, a much riskier play, just because of Alibaba's focused on the Chinese ecosystem, and obviously with fears around tariffs and trade wars in US versus China, it can be seen as a risky play, and it's something that psychologically I've already written off, for example. But with the stock, and the reason I bought it is because of how much cash the company had, how much they have. They're almost seen as the Amazon of China, for example. They have so much cash, they were buying back shares, and they have different businesses. So they have the e-commerce side, they have the cloud side, and there were also some meetings with the president of China and Jack Ma, who used to be the CEO, which is obviously very, very big news, because China doesn't work like a typical capitalist society like the US. So I was very bullish on that, and they are listed on the New York Stock Exchange as well. So it's a position that I'm fully invested in. I'm not going to be adding to this position, and it's something that I can see at least reach the all-time highs where we saw the massive dip off from COVID. So it's, in my opinion, still very much undervalued. I don't think it's seen the full potential of the stock so far. So it's something that I'm happy to hold going into next year. So I'll be excited to see where we end up with that. Next on the list, we have Amazon. Again, another fantastic company, different businesses. You can almost say Amazon is an ETF within itself, just because of how many companies or how many industries that they're involved in. They obviously have the entertainment side, they have Amazon Prime, they have e-commerce, they have cloud. They're looking to get involved more into like robo-taxis, for example. There is just so many different ways that Amazon is involved in probably your life as well. You probably use Prime, etc. So a very strong company here, which I bought during the whole tariff war, and we had a massive pullback. That's when I invested into Amazon there, and it's something that I'll be keeping going into next year as well. So I have just over 37 shares of Amazon. Next on the list, we have our All World ETF. Now, the All World ETF is a much more diversified ETF than the S&P, just because the All World is tracking different companies in different regions and obviously countries. So there'll be exposure to companies based in Japan, companies based in Europe, companies based in the UK. But it's quite funny because most of the companies that are investing in the All World are focused on the US still. So, you can't really get away from America, even if you wanted to, right? They, just so dominant, and the value is there in the US. We can see that with the products that we use and the capital that is based in the US as well. So I have a smaller position of the All World, and I haven't added to it in a while now, as I've been focused on some crypto, which I mentioned previously, and my S&P. And then we have a position in the emerging markets ETF, and similarly I haven't added to this one just yet because I wanted to focus on the S&P, but it's the position that I'm going to keep. It's a position that I may continue to add, but there is definitely value in emerging markets in my opinion, but I just think there is more value in adding to other companies and ETFs. Lastly, we have a small position in Google, just under 2 shares of this company, and it has performed so well. Google, I have a much larger position on FreeTrade, which we'll go into a lot more detail on, but when you look at the gains, it's always funny looking in hindsight. You always think, I wish I invested more, for example, but you never know when you're in that moment and you invested in that company. So yeah, happy with the results. I'm not adding to it yet, but let me show you my other portfolio on FreeTrade, and I might give you a little bit more context as to why I am still holding Google. Now guys, welcome to the second portfolio that is based on FreeTrade. This is my general investing account. As mentioned, should have opened a nicer back in the day, but I was a student and I didn't know much better, hence why I make these videos now, to show you the mistakes to not make and, you know, show you my journey as well. So looking at Google, it was still a great buy at the time. I knew that Google and Microsoft were heavily undervalued, right? And I invested, I think, just over £500, and we are seeing the gains so far today as we're up 200%. A lot of people were bearish on Google because they thought that OpenAI would essentially come in and just dominate, and Google would be perceived as the eBay of this time, for example. But that's far from the case. Google still has 90% essentially of search traffic, and they've, you know, created different software such as Gemini to directly compete with OpenAI for a fraction of the cost, right? So it's a position that I'm still holding now, and it's something that is obviously quite key to this portfolio on my general investing account. You can also see the average price. I bought at a price of just over £76, and I have just under 7 shares of Google, so to speak. Next we have Microsoft. I bought this at the same time as I bought Google, and I am not looking to sell this position either. It's something that I'm just going to hold for the moment as well. Just over 2 shares of Microsoft. It's still a very, very good company. Obviously it pays a dividend as well, which is nice, although it's not crazy money, but we'll take it nevertheless. And yeah, I really do like Microsoft and how the management is, so to speak, of the company. So there's no reason to panic sell out of these positions as well. And I recently listened to one of their talks, and they were talking again a lot about AI and how they're positioning themselves going into 2026, especially with the different competitors coming up. They have shares in OpenAI as well, so it'll be very interesting to see how they'll position themselves going into 2026 and the different innovations that they'll obviously release. So still very bullish on this company. Although they're large corporates, they still have that startup mentality, which is great. And lastly, we have Meta as well, which was actually a free fractional share, which was nice. And it's something, it's a stock that I'm definitely got eyes on, as I'd be open to buying more of Meta on my stocks and shares ISA, but nothing at the moment yet. Sometimes it's good to be patient, and having no position is a position as well. Now, as always, we'll be investing into our S&P 500, £1,000 worth of shares, and this is obviously a long-term position, not something that I'm intraday trading, for example. So really happy with that position at the moment. And we'll also be investing £400 worth of Amazon stock to build up that position in Amazon. So really happy with those positions. I like Amazon, very confident on it, and I'm excited to see how both of these positions play out going into 2026. So if you watched it to this far, appreciate you watching the video, and let me know your thoughts below. Have you started your own investing portfolio? Let me know your thoughts on the positions at the moment, and if you're open to seeing what I've done so far in crypto, I'll be happy to add those to my portfolio updates as well. So see you on the next one.